The bank said yes to a car and no to your freedom. Here's the trap nobody talks about. Picture this. A woman sits across from a loan officer in a bank that has served her family for a decade. She makes $84,000 a year. She has two clients already paying her $3,000 a month on the side. She has projections, real ones, showing that in 18 months, she could be earning $150,000 if she could just go full-time on her own business. She's asking for $25,000, not to buy a boat, not to fund a vacation, to build something that generates income for the rest of her life. The loan officer nods politely, taps a few keys, and tells her she needs 18 months of business tax returns she doesn't have, audited financials she can't produce, and $30,000 in collateral she doesn't own. Denied. She walks out of that building feeling small, feeling naive, feeling like she just learned some brutal lesson about how the real world actually works. And here's the gut punch. 3 weeks later, an envelope arrives from that exact same bank. Inside is a pre-approved auto loan. $38,000. 6.2% interest. No business plan. No collateral. No 18 months of anything. Just her W-2. The same W-2 that apparently wasn't good enough to build a business. Suddenly more than good enough to finance a car that will lose $15,000 in value the second the tires touch the street outside the dealership. Think about that contradiction for a moment, because it should make your skin crawl. The loan that could have tripled her income got rejected. The loan that guaranteed she'd lose money got approved in minutes. That is not a coincidence. That is not bad luck. That is the entire financial system operating exactly as it was designed to operate. My name is Dylan, and for the last several months, I've been obsessed with a single question. Why does the banking system make it effortless to borrow money that destroys your wealth, and nearly impossible to borrow money that builds it? If you've ever felt like your salary is a cage disguised as a paycheck, or you've ever suspected that the friendly advice your bank gives you is actually a sales pitch wearing a helpful mask, stay with me, because this is going to change the way you look at every piece of mail your bank ever sends you again. Here's the part almost nobody explains to you. Banks are not evaluating your potential. They are evaluating your predictability. When you walk in asking for a business loan, you are asking an institution to bet on a future that doesn't exist yet. That's risk, and risk terrifies banks. But when you apply for a car loan, you're not asking them to believe in anything. You're handing them a W-2 that proves you have an employer, a boss, a job that generates a paycheck every 2 weeks like clockwork for the foreseeable future. That's not a bet. That's a guaranteed revenue stream with your name attached to it for the next 6 years. And here's the truly disturbing layer underneath all of this. The bank isn't just calculating whether you can repay the loan. It's calculating whether you'll remain in a position where you need to keep repaying it. A business owner who actually succeeds becomes financially independent. An employee carrying a car payment stays financially dependent, tethered, predictable, exactly where the bank wants them. One of those customers eventually outgrows the bank entirely. The other one needs the bank for the rest of their working life. And banks, unsurprisingly, are not in the business of manufacturing their own obsolescence. Let's talk numbers, because the scale of this is almost impossible to comprehend until you see it written out. Total consumer debt in the United States sits above $17 trillion. Almost every fraction of that mountain is tied directly to income. Your mortgage size is calculated from your salary. Your car loan ceiling is calculated from your salary. Your credit card limit is calculated from your salary. The entire architecture of American lending rests on one unspoken assumption, that your salary represents the outer boundary of your financial capacity. Full stop, end of story. And that assumption isn't an accident of bureaucracy. It's engineered deliberately, the same way a casino engineers the layout of a floor to keep you playing longer than you intended. Look closely at how debt is actually marketed to you, because the language reveals everything. You never see an advertisement that says, borrow money to start a business you control. Instead, you see, you deserve this car. You've earned this vacation. Treat yourself. You work hard. Every message is engineered to tether your borrowing to your current identity, your current comfort, your current lifestyle, never to your future capacity. The debt you're offered is always calibrated with surgical precision to keep you comfortable at your existing income level, while making absolutely certain you never accumulate enough surplus to escape it. Notice how your credit limit magically increases right after a promotion, almost like clockwork, almost like it's designed to make sure that no matter how much you earn, you remain stretched to the very edge of what that income can support. You're always one missed paycheck away from disaster, and that precarious position isn't a side effect. That's precisely when you are most valuable to the institution holding your debt. Not when you're wealthy, when you're leveraged. Now you might push back and say, fine, but banks have to manage risk somehow. That's just how lending works. Except that logic collapses the instant you look at what these same institutions will actually approve without blinking. That exact bank, demanding 18 months of tax returns for a $25,000 business loan, will hand you $75,000 in credit card debt off a 10-minute online application. They'll approve a $100,000 home equity line of credit you can spend on absolutely anything, zero oversight, zero questions about what it's for. They'll finance a boat, a jet ski, a destination wedding for 200 guests. The barrier to borrowing for consumption is practically non-existent. The barrier to borrowing for wealth generation is deliberately, almost cruelly insurmountable, unless, of course, you already possess wealth, in which case you don't need the loan in the first place. That's not risk management. That's a machine engineered to fund consumption and quietly sabotage wealth creation. Because consumption keeps you strapped to the treadmill, and wealth creation is the only thing that lets you step off it. Let's put real math behind this, because abstractions don't sting the way numbers do. Say you earn $90,000 a year. Your bank will comfortably approve a mortgage around $300,000. They'll finance a car worth $35,000. They'll extend credit cards totaling maybe $40,000 in combined limits. Add it up, and you can access well over $370,000 in debt. Every dollar of it structured around a salary you already have. Now, imagine you want $50,000 to start a business instead, a business that, run competently, could realistically generate an extra $5,000 a month within a year. That's $60,000 in new annual income. Your $90,000 salary effectively becomes $150,000. The bank won't give you that $50,000, but they'll hand you $370,000 for a house, a car, and credit cards, assets that generate nothing, liabilities that only ever lose value. They will not give you the one loan capable of actually altering your financial trajectory forever. And here's the detail that should genuinely infuriate you. It isn't rejected because the business is risky. It's rejected because the business is too likely to work. The moment you clear $5,000 extra dollars a month, you've shattered your salary ceiling. You've stopped being an employee financing a lifestyle and become someone constructing wealth. And wealthy people simply don't need banks the way leveraged people do. This programming runs so deep that most people never even walk into the bank to ask. They glance at their salary and quietly conclude, this is what I'm worth, this is what I can afford, this is my ceiling, full stop. The woman in our story almost didn't apply at all because some quiet voice in her head had already decided she wasn't established enough, wasn't ready enough, didn't deserve it. She had internalized the rejection before the bank ever spoke a word. That is the genuinely brilliant, genuinely sinister part of this entire system. It doesn't merely block your access to wealth-building capital. It reprograms you to stop asking for it altogether. You accept your salary as your limit. You architect your entire existence around monthly payments calibrated to what you currently earn. You start measuring decisions by, can I afford the payment, instead of, will this build an asset? And the instant you start thinking that way, the bank has already won, because now you're spending your energy managing debt instead of accumulating equity. They've successfully redirected your entire financial imagination into optimizing life inside the cage instead of ever attempting to leave it. So what actually happened after that rejection? She didn't take the car loan. She kept driving her old, unglamorous Toyota. She kept clocking in her day job while building her consulting practice at night and on weekends, exhausted, unfunded, entirely on her own terms. It took her 2 years instead of the 6 months she'd originally hoped for, but she eventually went full-time. Today, she earns $230,000 a year. Her business employs 4 people. She holds equity in something she physically built with her own hands and her own sacrifice. And last month, that same bank, the one that told her no when it actually mattered, called to offer her wealth management services. They want to help her invest her money now that she doesn't need them. now that she built everything without a single dollar of their help. They said no when a yes would have changed her life. They're saying yes now that their approval is completely irrelevant. And she told them, politely but firmly, to lose her number. Here is the uncomfortable truth sitting underneath this entire system. Your salary is not your potential. It is simply the current market price someone is willing to pay for your time. Nothing more, nothing sacred about the number. But banks desperately want you to mistake that number for a ceiling. They want your entire financial identity constructed around it. They want you borrowing right up to the exact edge of what that salary can support. Because as long as you're thinking in those terms, you're thinking like an employee, someone who needs financing to sustain their own life. And people who need financing to survive need banks forever. People who own appreciating assets, who generate independent cash flow, who build real equity, they might still use banks occasionally, but they don't need them. That distinction is everything, and the entire lending apparatus is built to make sure the average person never stumbles onto it. Right now, you probably consider yourself financially responsible because you only ever borrow what comfortably fits your salary. You run the calculations. You check that the monthly payment leaves room to breathe. But what if genuine responsibility means refusing to let your current paycheck define the outer limit of your future wealth? What if the smarter question was never what can I afford, but rather, what should I actually own? Banks desperately want you fixated on affordability because affordability keeps you circling inside your existing limits forever. Ownership is what lets you break through them. Every single dollar you funnel into interest payments is a dollar that could have purchased equity instead. According to Federal Reserve analysis, the median American household will pay somewhere around $420,000 in interest across their lifetime. Nearly $500,000 quietly transferred to financial institutions instead of building a single asset for the family that earned it. So here's exactly what you do with this information. First, stop asking what you can afford and start asking what you should own. Build a list of assets that either generate cash flow or appreciate over time. Then compare that list against your current monthly debt obligations. The gap between those two numbers is your actual wealth gap, and it's usually far larger and far uglier than people expect. Second, automate a portion of every paycheck toward asset acquisition before you ever see the money hit your checking account. 20% toward wealth first, and let your lifestyle quietly adjust to what remains, not the other way around. Third, every single time a bank offers you new debt, pause and ask one blunt question. Does this make the bank more money? Or does this make me more money? The answer reveals itself almost instantly once you actually force yourself to ask it out loud. Fourth, and most important, refuse, permanently, to let your current salary define your financial ceiling. You are not worth whatever number your employer happens to write on your paycheck. You are worth what you're capable of building, creating, and eventually owning outright. Your salary is nothing more than your current agreement with a single buyer of your time, and that agreement can be renegotiated the moment you stop believing it's permanent. She almost took the car loan because the bank's yes felt good, felt like validation, felt like proof she belonged somewhere respectable. She almost accepted $84,000 as the absolute ceiling of her existence. She almost stayed an employee forever, exactly the outcome the entire system was quietly engineered to produce. But something in her refused to accept it. She saw the cage disguised as a benefit. She recognized that the bank was handing her precisely the kind of debt that guarantees permanent dependency, and she chose a different, harder, slower path instead. Not because she was smarter than everyone else denied that same loan. Not because she was fearless. Simply because she stopped letting a salary define her worth, stopped asking what she could afford, and started asking what she deserved to build. And now she's free. Not because the number on her paycheck grew larger, though it did, but because she owns something no employer and no bank can ever repossess. She has equity. She has options. She has wealth that exists completely independent of any institution's approval. The ceiling was only ever real because she believed in it, and the moment that belief cracked, so did the cage. You're not an employee scraping together enough to afford your own life. You are a wealth builder who has been systematically, deliberately trained to think small, because small thinking keeps the entire machine profitable. Your salary was never your ceiling. It was only ever the current price of your time. It's long past time you stopped selling it cheap.